Ti ricordi quella sera che per gioco tu baciai? Sembrava solo un'avventura.
All right, we are here live in Mexico City at the Stablecoin Conference powered by Bitso Business. We're here with Dan Cartolin from Sphere Labs. So, Dan, why don't we start with your role at Sphere Labs? That would be helpful to kind of kick things off, and then, a little bit about what Sphere does and how you see the space.
Yeah, no, absolutely. So I'm the head of BD and business development at Sphere. Officially been with Sphere for 6 months, but I've known Arnold, our CEO, for a year and a half. And he was constantly telling me about the vision, what we want to do as a company, cross-border issues, remittance issues, sending money back home, et cetera. Personally, Peruvian immigrant. And so my parents always struggling with the commissions I used to have to pay with Western Union, et cetera. So as he kept showing me on, look, this is what we want to do. We want to build a cross-border engine that is essentially kind of free and it helps a lot of businesses, but also individuals send money cross-border. Why don't you join? And so officially joined, been doing a lot of the business development in the Americas. That's where we've been focusing for the most part. Have built a good network of clients, good network of partners. And, the next step for us is just expansion, going from the Americas, continuing what we've done here in Asia, MENA, Africa, trying to take over the world essentially, which is not easy.
Yeah.
A lot of travel. But yeah, no, that's where we're heading. And Sphere, there's a lot of on and off ramp in the space. It's very apparent to anyone that has paid any attention to this specific industry. And some of the things that we're really focusing on is compliance, transparency, good FX, and overall just reliability.
Yeah. What seems unique about Sphere, to my understanding of it, is it has a really interesting two-sided approach to payments. You have the what do you call the retail side now, or the consumer side? What's that called?
It's our ramp product.
Ramp product. And then you have the institutional. Those are two very different businesses. And it's interesting how Sphere continues to, I think I remember the volumes on like the consumer side recently had been really going up and increasing to spike. Maybe speak a little bit about the specific products, or like why Sphere is trying to do both. Why not just focus on institutional or just focus on retail? What's the benefit of, maybe clarify what those two businesses are a little bit, and then the benefit of having them both in the same house?
Yeah. So at the heart of it today, we're very focused on B2B and having really good banking rails so that our consumer customers and also our business customers have a very fluid experience on and off ramping stables worldwide, right? And the reason that we have the ramp product is essentially when we looked at the space, it's very difficult to on or off ramp with traditional players that are out there, especially in the US, Europe. Everyone doesn't want to be married to a CEX. You want to be non-custodial. You want to use a, non-custodial wallet, whatever your choice is. And we decided that we're going to build this ramp product, which is our consumer-facing product, to help the fellow Degen be able to on-ramp, off-ramp, all-time highs, you want to take some profits, all-time lows, you want to start buying again.
Yep.
And not have to have your assets locked in at a centralized exchange, right? You always have control of your funds.
Because typically you would have to, if I'm a personal user or business, I'm going to pick a centralized exchange app or platform or product that I then have to go to, and they're in control mainly of like whatever banking relationships or on and off ramps they built within that product.
And they have custody of your funds too. Then, the centralized exchange is probably using your funds to do X, Y, Z, similar to what banks do when you're depositing there, right? And, having your funds in your non-custodial, it gives you a lot more flexibility into what you want to do. And you don't have to deal with long customer service wait times, shutdowns, et cetera, that we've seen in the space. It's really a gap that we wanted to fill, and it helps us get our name out there too. The Solana community is where we were born, and we really pushed this heavily in the Solana community, and now we're expanding, but obviously our hearts are very much tied to Solana, and they needed an on and off ramp, so it made sense. And if you look at our Twitter, it's been going pretty well, I would say, on that side of it a little bit.
Looking back, I mean, as you guys on a relationship's a really interesting one. We were just meeting with Shiraz. We launched the episode with Solana yesterday, actually, for our podcast. Continue to be fascinated with the speed and the what now feels like an embedded financial. Solana is not going anywhere. They're going to be around for a very long time. What advantage do you guys see of, working specifically with that layer one so deeply, so early? What kind of advantage did that bring you? It sounds like that was a really strategic relationship that you guys have cultivated.
So we were born from a Solana hackathon.
Okay.
Arnold built the initial MVP of what Sphere is from a hackathon, won first place, gave us the push, and having that relationship to build the company that we are today. Processing billions a year and having hundreds of customers worldwide wouldn't have happened if it wasn't for Solana, right? So right from the get-go, they believed in us, they believed in the vision, and they really impulsed us in the space to, from a grant perspective, relationships, connections, banking relationships, really helped us out. So, payments in general is a very trust business. And we built a lot of trust with the Solana Foundation, and we're continuing to build on top of that. There's a lot of things that will be coming out pretty soon on what we're doing with them. And it just made sense from a tech perspective as well. High throughput, fast payments, low gas, perfect things that our customers like to hear.
Yeah.
Especially a lot of our traditional customers are dealing with gas fees for the first time. One of my really good clients now, they're a traditional PSP, had never really done crypto, but they saw some of their competitors start to adopt it. And they're like, okay, we gotta do something here. And to teach them how to download a wallet, use it, how to receive funds. And his biggest issue was gas. He had no idea.
It's scary. It's scary. Getting, I think that's really smart. Like, especially on the BD and sales side, which is my background too, just like getting people to just get involved in the technology is easy. And it's like, oh, you're interested in this stuff? Just go download a wallet,
Yeah.
What was the wallet that you recommended they use? Phantom wallet?
Yeah.
Awesome. Speak a little bit, your background and Sphere specifically, when I was talking to Arnold, like this was like early days for our business. We do go-to-market stuff. We were talking to you guys around like, how are you thinking about go-to-market? Like, who are you trying to bring into this company? And he was describing like the ideal person. Like, we want someone who's incredibly well-connected, super deep in Latin America, has really great, BD experience, enterprise sales. And then I saw that they found you in this role. I was like, oh, that's perfect. Like, based on your background, share a little bit about your history within Latin America. Like, what were you selling? What was your background there? And then how are you planning to bring that? The big theme for these conversations is going to be stablecoins in this part of the world.
Yeah.
So I'd love your perspective on like what you've learned along the journey as you've sold in this market.
Yeah, no, of course. Before Sphere, I was at Chainalysis, and
You were there for a while, right?
I was there for 5 years.
That's a long time.
I was one of the first employees. I was one of the first BD guys that focused on expansion to Latin America. And when I joined the sales team, I think that chain was like maybe 10 people worldwide. And we weren't really doing anything in LATAM. And on my resume, I had speak Spanish. So by process elimination, it just worked out. And this was in 2020. So since 2020, I've been deep in the weeds of LATAM crypto. And it was tough at the start. When I first started selling down here, Chainalysis offers a AML software suite, investigation software suite, selling to governments, fintechs, banks, and crypto natives. Back in 2020, still, the idea of compliance in crypto was, you have the side of the crypto world where it's like, why are we doing this? You have the bank side that's like, this is all money laundering.
Yeah, you're kind of living in this weird middle.
Exactly. Where like you have to find the guys that are forward thinking and understand we need regulation, we need AML laws to bring this asset class to the next level, which we've seen over the years. Regulation is honestly one of the best things that's happened in the crypto industry and helped it grow. But it was tough. I was knocking on doors all throughout LATAM, banks, fintechs, and they'd invite us in. They say, yeah, we're interested to learn. We'd give them a quick crash course on what blockchain is, what Bitcoin is, why it makes sense. And at the end of most of those conversations back then, it was, thank you so much.
Really interesting.
We're not going to do anything with this. Perfect. And over time, it got better and better and better. As I was at Chain, started working with really big banking institutions like in Brazil, Itaú, in Colombia, Bancolombia, which ended up launching their own crypto exchange. In Mexico, Banco Azteca, which is doing a lot in the crypto space here. In Argentina, Mercado Libre. So that really helped me just get a really good understanding of how legitimate large institutions in Latin America are thinking about crypto, and it all went the stablecoin route. offering buy, sell, hold was attractive, interesting. You charge transaction fees, nice, but there wasn't really anything substantive. It was all speculative investment, sort of
Like helping these financial institutions offer buy sell to their end clients, like either not by doing that in some ways.
Yeah, but that was always their first thought. It's like, we have to offer buy, sell, hold at least. And then it started evolving to, okay, maybe we do custody, especially at banks. Maybe we already hold a lot of the money for our customers already. Our customers are starting to buy Bitcoin, but they're storing it on ledgers or centralized exchanges, et cetera, et cetera. Why don't we do the custody? So it evolved to that. And then over time, it evolved into, we have an FX side of the house. We do payments. What we're hearing is that stablecoins make payments more efficient in, exotic markets, especially Latin America. And that's really when the bulb started to hit with a lot of these big corps of, maybe we should move into a stablecoin based payment system. That was around the time when I was leaving Chainalysis and joining Sphere. So it was kind of perfect timing.
Yeah. You sort of saw that pivot, that evolution happening. And this was about a year ago now.
Yeah, about a year ago. And I saw the writing on the wall where stablecoins were just going to be massive. Being at Chainalysis, I had the privilege of getting really into the weeds of regulation as well with governments throughout Latin America. I still have really good friends that are in government positions. They're doing both sides, regulation, but also fighting crime, which, that side of the house is very important. Hearing from them, yeah, I think we're going to do this. I think we're going to do X, Y, Z. I think we're trending in this direction. It just really gave a lot of signals of, okay, stablecoin based payments are going to be a thing. And maybe I should join a company, trying to build on that. And Sphere made a lot of sense. What I've been doing a lot with Sphere is getting our brand, first and foremost, understood in the Americas, having people get to know us. Because a lot of this industry is trust and relationships, especially in Latin America. Anyone that's going to hear this, that's in sales in LATAM, you could probably have a bad product, but as long as someone trusts you and you have a good relationship, they might use it. They'll probably still use you. Sphere has a great product. But it's all, relationship based. That's a lot of what we're doing right now, building connections, building relationships in LATAM with guys that are already there that want to do it perfect, they're using us, but also people that are at the cusp of, we really want to do this. What are the regulatory, blockers that we may have? We're a large corporate that moves millions and millions a month in and out of XYZ country to go back to our, headquarters in XYZ country. Will we get into any issues with our regulators when we do this? And we're doing a lot of educational consultative work, because our whole vision is to capture that next wave of stablecoin adopters. So that's where the real money's going to come in. Right now, we're seeing the Degens sort of adopt this, and a lot of big institutions that are adopting this, but they've been looking at this for a while, and it's taken them a long time to make these decisions. The next wave is just starting to learn. And that's where we're going to see way bigger adoption. Anyone showing Chainalysis at this point, but anyone that looks at their geo reports and adoption reports can see that year over year, grassroots adoptions in emerging markets has just grown. And this is, due to economic issues in the country, taxes that are applied on cross-border payments, just overall inflation with their local currencies, and they're looking for a safe haven in stablecoins. And, USDT and USDC have a big grasp in the market today, but it's going to be really interesting to see how the next wave of stables, especially yield-bearing stables in the US, people don't really, give it too much of a bat of an eye. It's like, oh, we can put into a money market fund. It's whatever. I don't need to have stable coins to get yield on my dollars. But in a country like Bolivia or Argentina or Angola, having access to a money market fund through a yield-bearing stablecoin is massive. There's still a lot there, but yeah, that's sort of
bring us into. I mean, I'm very interested in yield-bearing stablecoin differentiation between the U.S. and non-U.S. countries. Genius is pretty clear on payment stablecoins are not yield-bearing. How are you approaching that? Where do you see the opportunity there? Maybe help people who might be listening differentiate between these two types of stablecoins, maybe what they're used for, and then how you really ultimately, I'd love as we close here, just bringing us into the room of some of the conversations that you're having with folks today, priorities, and what you're hearing of how would you use something like Sphere for this? So sort of a two-part question. Give us the breakdown of yield bearing versus payment, and then bring us into some of these current chats.
Yeah. So a lot of our conversations today are payment based, right? Where it's, hey, we don't care what the settlement rail is. We just need money from point A to point B. So
for their own treasuries or something like that?
For their own treasuries, paying vendors. Give you an example. Bolivia right now has a pretty big crisis of lack of dollars in the country. And if you Google this, at the airport and various stores, they have price points in USDT. And
Wow.
the not the official, but like the parallel FX rate is Binance P2P. So in a country like that, where all they care about is just getting access to dollars, they don't really care about the stablecoin, nor do they care about the chain. They just need to get money out, or money to pay their, especially the import-export market and large corporates that are in that country. They need to pay their vendors outside. And if they don't have dollars, they need to find a way to pay them. So for them, it's just a settlement layer. The same as using Swift or ACH or Wires, etc. Just another settlement layer. Now, recently we started to have more Treasury rebalancing and just overall Treasury use cases. And a couple of large corporates that we're talking to are starting to flirt with the idea of, what if we keep our Treasury in stablecoin and then just move in and out whenever we need to? Let's say, you're a large manufacturer in the US, but you have hubs in Asia, in Africa, in LATAM, etc. You have your profits that come from that country. You want to get it out and back to the US or Europe. But also you have to pay your staff, you have to pay your people on the ground. There's a lot of FX risks there, especially, in a very volatile market. Argentina back in a couple of years ago, or Bolivia today, you lose the money that you earn. One day to another, the FX can be extremely different. They're starting to flirt with the idea of keeping treasuries in stablecoins. And now we're starting to hear a little bit of, hey, can you teach us a bit about these yield-bearing stables that we're hearing about? I'm hearing 4% yield passed back to us. And it's like fractional. It could be daily. It could be monthly. So I haven't seen anyone just straight up say, we want to do this tomorrow. But it makes sense from a finance perspective. And it's all these traditional CFOs of these companies that are thinking, yeah, I would love to earn yield on us sitting on a pile of cash here.
Yeah.
And also the other side is, I don't want to hold on to foreign currency for a long time. I'd rather have it in euros or USD. Another big use case that we're seeing is corporate holding balance in USDC, USDT, etc. And only when they need to pay someone in XYZ country that they'll do the off-ramp to that foreign currency outside of US or euros. US euros is typically where we see our customers just holding most of their balances. So I'd say that it's still early days based on my experience. I've been in Bolivia, Brazil, Colombia, talking to different large corps and fintechs, and they're still learning and getting to that space. But the cross-border settlement, the payment side, it's a no-brainer for them. It's the same as a wire for us. We don't need to see it. We don't want to see it. We don't really care. The guys that are more forward-thinking are thinking of that treasury use case. And then the all-encompassing thing is compliance and regulatory compliance. That is still the biggest blocker for a lot of people. And you need to make them feel comfortable with your level of compliance. And one of the things that's gone well for Sphere is that we're a US company, we're US regulated, and that makes a lot of people feel more comfortable. So they look at our compliance team, they look at who we have on the ground, they look at who our compliance leadership is and where they've been. Our compliance leadership comes from TradFi, American Express, Cash App, Block, and then also crypto companies. And it just makes them feel more comfortable. It's like, okay, these guys know what they're doing. The compliance might be a little over the top at times. They're asking for a lot of documentation, but it's for a good reason. You're onboarded once. After that, we never ask you for anything again, and you have full experience of all the rails. So
That's all.
I hope I answered.
No, you did great. We'll have to wrap there, but that was your quick insight to Sphere Labs from Dan. Thank you, man. This was awesome.
Absolutely. No, this was fun.
Ti ricordi quella sera che per gioco tu baciai? Sembrava solo un'avventura